Dollar bill, y'all. Oh, he's making it rain over there. He's making it rain.
Y'all don't even know.
Some people will not know the reference to that for sure. But where it came from.
All power right there.
That was in music. Wasn't that in a music in a song as well as a movie? I don't know. Dollar bill, y'all get used to it.
It's Wu-Tang Cream.
Excuse me?
He's too old for that. That's like
I know that. I played them once at a concert or at a festival as a karaoke jockey and was told you might want to turn that off.
Was it a Renaissance festival?
After someone asked me to play it for them. It was an Italian festival, actually. All right. We're moving.
Some Karen.
Let's get started here. I'm Darin with Arbitrage Trade.
Wu-Tang Clan.
They just won't let me. Wu-Tang keeps coming back. I'm Darin with Arbitrage Trade, and this is After the Bell. It is after Wednesday. It is after Powell Talk. It is after the Red Sea, which we'll get into. My guests are Daniel Hopwood. He is back, and he's in the U.S. If you were trying to find him, authorities, he's back in the U.S.
And like that.
Yeah. Did we have...
He's back in East LA.
At least I didn't say where. Could be one of the coasts, though. Always one of the coasts. Yeah. We got the banker, JPM, Josh Morgan, and then we have Royce, who says that "Go Jesus, it's your birthday." Well, that's what his sweatshirt says. Hey, where's your lights? You had lights earlier. Where?
Hey, don't look directly into my headlights. This is a really G-rated show.
There it is. Don't plug them into your laptop to charge them up.
They already are, actually.
That may be what happened. Okay, all right.
Then they charge. Then they plug back into the sweatshirt, and then I can walk around and be all festive.
All right, guys, let's get started. We're going to talk to general markets, and I mean it happened today. The most predictable thing in ever. The Fed cut it to 0.25 below or lower, and everybody knew that's what was going to happen.
So badly.
It was, yeah. We'll talk about that. I'll let you take the podium. But 0.25 down. The Red Sea definitely flooded in after that, and the main reason, as was given by that network we love so much, was that we went from, we'll call it the dot plot, or what was going to, let's just call it futures of what the cuts will be, went from 6 to 2, and also it was said that we are close to where we're going to be. Period. What do they call it? What's the normal? I forget the term for it now. All right, too much. Moment. I am. Got the hair for it. At least I have hair, though. I'll always be blessed with that. Oh, wait a minute. I didn't. Oh, jeez. I forgot about that.
That's all right.
Hey. Turkey's not that far.
First missile has been fired over the wall. Because he did it before.
Okay.
Unintentional fire.
Boys.
Anyway, I just want to let you know this is my last broadcast. Anyway, the rate that we're going to get at and stay, and whatever that term is, I don't know why it's out of my head now, that we are very close to it, meaning that there will be very few, if any, cuts next year, and the market is trying to adjust to that right now. That's the narrative anyway. What say you, Royce? Why is there a Red Sea right now?
It just, as the song says, give me one reason to stay here and I'll turn right back around. Right?
Volatility bounce. It was time.
It was time. And basically a lot of people have been talking about how the market has been very stagnant the last few weeks, right? And nothing has been moving. Well, in order for us to continue that up and to the right momentum, you have to have a sharp decline to allow probability to re-expand. And typically, whichever way it goes the opposite way because that's who it's making room for. So this nice hard pullback, if you remember like the COVID-19 crash, it went hard down. And the first thing it did after that, and for months and months after that, was go up. So buckle up, here comes Trump.
Pretty much. I mean, Trump was the narrative of why everything went up. So now Powell is going to be the narrative as to why everything's going down. I don't know. We'll see.
It's going down to make room and allow people to get in at a low price and keep going up. It also allows the different countries to reevaluate how their commodities are handled across the globe, because professional forex traders trade the interest rate. They don't care which way the market goes. If one interest rate's lower than the other, they will literally just get in a position and let the money drip in every single day. So every time they adjust those interest rates, it allows different countries, and it's like wink, wink, nudge, nudge. Hey, we're going to be going this way. You should be probably playing these pairs to get the most bang for your buck. So is it going to hurt? And initially, no, it's going to shock a lot of people. But the people who win this long game are the people who are patient. So, yeah, let it fall. It will rise. Markets were made to go up, not down.
All right, Daniel, you brought some facts as far as where we are with the markets. Some of it's changed today, but I mean, go ahead and tell us the trends that were happening up until today.
Yeah, so in the last 10 trading days, which I guess maybe now it's 11, more stocks have fallen than risen, which hasn't happened since 2000, right? And now, we've had a pretty,
.com.
red day. But tech is still up 4% in December, which, may not be true anymore.
Right.
I did not look at the NASDAQ.
Yeah, it went down for sure, big time.
Yep. Same with the Dow. First 9-day losing streak since the 70s. So not a lot of happy, go lucky, normal things that I bring and love to talk about in this markets part to prove Darin wrong. But it's definitely a bear's day. So we'll let Darin dance on my grave a little.
Well, no, but Nvidia also you said was in its correction territory, and then this morning it was going up about 4 to 5%, and of course now with the overall of what happened after this Fed meeting, it's reversed as well.
It's like it's down 1%. So yeah, it's definitely
so it went 5%.
Correction
it went 4 up and 1 down, I guess. So in one day, so that's some volatility for sure going on there. You said job postings too, because the Fed's job is employment, right?
Mm-hmm.
And interest rates. They have a mandate, 2 mandates, right?
The Fed.
Hello? Yes. Capital markets and employment.
I think their mandate is to make everyone go crazy.
That is true. I think it's to take whatever they're being told to say and just throw it back up to the audience. So, Banker, what say you about today's Red Sea and what's going to be the Moses to come in and part it?
I'm starting kind of piggybacking off what we've discussed, several times over the last few months is like there's been so many red flags that have come up. Like I'm kind of wondering if maybe Buffett has been onto something with his whole cash hoarding thing. And we're starting to see a lot more similarities between, more parallels between 2000. And we know what happened in 2000, and we've got that big giant tech boom that has come in and has really brought in a lot of opportunities and a lot of emerging markets and a lot of, big tech and AI and everything that's happened. But at the same time, so many things are so overvalued right now. We're going to have a correction or a pullback or something. Like to Royce's point, we're going to have some red before we can continue to go green. So I'm not saying, there are some parallels between 2000. I'm not saying it's time for doom and gloom, but we're going to have something that's going to have a little bit of cooling off, a little bit of pulling back, a little bit of end of the year profit taking. Some people, a lot of the hedge fund guys are off work. It's kind of more of a retail driven environment right now. The holidays, everybody's excited and people are just kind of cashing out, I think. But there's a lot of different headlines and storylines that are going on right now that are kind of driving things, but at the same time, you still need a little bit of red before you can go green.
Okay, so reckoning. There's a reckoning right now, and how far will that reckoning go? I'm just playing like the guys, on TV play. They take something and just run with it. All right, to whatever their narrative is.
Never mind.
All right, so as was said, the dollar is crushing it. I did say the word, and it went over 108. What's it now? Anybody got it pulled up right now?
Yeah, it's at 108.
Or 109 yet?
2.4.
Okay.
2.4 is that
and a quarter.
Yeah, and that's the
Wow.
one that's Trading View's version of it.
Well, yeah, there we go.
Because there are several DXYs, not necessarily from Trading View.
Gotcha. You brought in a JP Morgan index there, Daniel. What were you saying
Thank
about
you.
that? I know. I thought about that. So just let JP Morgan talk about it.
Yeah. So a lot of the we were actually talking about this before we started recording the podcast, is that
Yep.
emerging market currencies are getting crushed by the rising dollar. And looking at a JP Morgan index of emerging currencies, it's on pace to see its biggest quarterly decline since 2022. And I also read, I think it's probably within the last month, that China is supposedly looking at devaluing their currency to offset U.S. tariffs. So it's kind of pairing up to be not good to be standing in front of the U.S. dollar, because it's a bit of a speeding train that is potentially not going to stop.
Don't forget India too.
I said that they would do that, but we were talking about Canada when they were talking about tariffing. So China's going to be the first. Hell yeah, let's go.
Yeah, like I said, India's doing it too. So it's not just China. So you got those two big guys over there that are devaluing in general. So it'll be fun to see what happens, or not fun, depending on which way you look at it.
Definitely
I guess
fun. How do you do debt? Make them devalue their currency.
Okay, so Friday, isn't it Friday? I think I was saying that the interest rate decision for Japan is coming up. So, Royce, tell me what that might or might not do. We already know that they're going to double it, basically, is what the word is, from 0.25 to 0.50, right?
Yeah. So prior to them raising it to 0.25, it was 0, if not negative, which means countries were literally lining up in droves to park their money in Japan, because Japan was literally paying them whatever their interest rate per day or per year was on their money for it being there. Right? So the difference between the two interest rates basically is what you make in daily finance fees every day. So it means Japan was literally saying, please put your money in our currency and we will pay you if you leave it in our currency. Well, now as they're raising their interest rates, the people who have fallen asleep and have left their money there too long, well, Japan's starting to say, well, there's a differential now. You're going to have to start paying us now if you want to keep your money in the yen, which basically makes, just like when they did when they started raising the interest rate. The moment you start raising the interest rate, you're telling smart money that your money should not be in the stock market. It should be in the bank, because it's a risk-free, high-yield reward. So the fact that Japan is actually raising their interest rate, that's literally saying, all right, everybody get out of the pool. We're done. You're paying if you're staying, right? So, hey, I want to see them raise it to 5. I want to see them raise it. Heck, I'd love to see them raise it $1 full. 1 full point, baby. Let's go.
Hey, that's what the U.S. has done.
Japan's back, baby.
Yes, Japan is back.
I need them to hold off until after my trip. That'd be
no.
By Friday.
All right.
Let's.
They can do that, but remember, raises depend on liquidity.
Good thing we're not in Japan.
Oh, liquidity! Go liquidity! All right, let's move on to an absolutely ridiculous thing that's happening, which is meme coins and crypto. So there's even and if you would like to hear more about this, by the way, especially like AI agents that are out there now, scary multi-universe thing. Daniel and I talk about this in Deep Dive with Daniel. It's almost like listening to a sci-fi. So anyway, let's go back to speaking of craziness. There's something called a fart coin out there.
Can
And-
anyone guess the market cap of Fartcoin?
I heard it blows the other one out of the water.
Oh.
It's bubbling up.
$700 million in market cap
anything.
for
Barely
Fartcoin.
anything.
Yeah. So here's the moral of the story: create your own coin,
Already
and
done.
then rug pull, when you're done.
Darin said he's going to create Sharkcoin.
I did. I told Royce that I'm going to do shark coin.
I'm having a feeling it's not going to move.
It'll just stay right there.
It
in
might
your
run.
pants. Oh,
It's
boy.
going to run.
Yes.
It's going to run.
That depends.
No.
I just had to
Stop
stop.
it.
Okay. All right.
Stop.
We're done.
Stop.
All right, back to meme coins.
Yes, AI agents. I mean, you kind of do a quickie on what that means, what an AI agent is, the concept of it, and then we'll get back to reality. Go ahead.
Yep. So, in all the previous, kind of big crypto cycles, you had DeFi, then we kind of had NFTs last time, a little bit of meme coins. This time, I think we're going to get a lot of meme coins, and they're all going to be developed by AI agents. So, long story short on what that is, you can listen to Darin and I's deep dive to really learn what they are. They're essentially, kind of independent AIs that start their own meme coin because they can do it very easily on the Solana blockchain. And then they pump it through their own Twitter account that is run by an AI. And so, these AI agents have, one even took an investment from Mark Andreessen, made his own coin, and then it was called Godius Maximus, and it had a market cap of $950 million. And now there's even AI agents that run their own DAOs, essentially making themselves a hedge fund, where it's all done autonomously through, the AI agent once it's set up by a human. So, these things have gone pretty ridiculous. But so that's my prediction for this crypto cycle of how they go.
Good.
That was Royce's indication that he owns a lot of Fartcoin.
Hey, any way the wind blows.
Oh boy. Is it green
I
clouds?
mean, this is one of the reasons I still struggle to take crypto. I mean, I understand that cryptocurrency is here and it's probably here to stay, but when you've got something that's, you've got like Dogecoin marketed at like $14 billion, which is higher than like Dollar Tree and Duolingo and like Walgreens and a couple of other places. It has no purpose, no substance. Like what exactly does it do? Like what am I getting by investing in this company? And
But it does. There's hidden meaning behind a lot of it.
Oh,
there's hidden meanings by every investment that you could ever possibly do.
No,
but they all have
is like
tangibility.
For example, Ripple. Ripple was made for cross-border stuff, right?
Mm-hmm.
Doge was originally made to do all online e-commerce. That's originally why it was created. It became a meme coin, but that's why it was originally created. And a lot of people lost that, and they're like, it's a meme coin, but that's not why it was created. That's not why it's ecosystem. That's not why Shiba Inu and all these other derivatives came over, because basically it's like, okay, we want to be able to convert from this crypto to that crypto, but they're all in the ecosystem. It's sort of like having, like, Doge is like the dollar of all of the central banks, but for all of its Doge ecosystem. Like, so anything that's based on on Doge, all of them will transfer into Doge and out of Doge. It's a happy medium. They're building infrastructure. Meanwhile, everyone else is just talking about them and drawing funny pictures.
And that's the the two things there. Like, first of all, meme coins is a much nicer term than what we used to use for those particular coins.
Speaking of Shard.
Mm-hmm. And there was a really valid reason that we used to do those, because they were created out of thin air. and they were built on momentum, the Momo trades, and it was really never anything that had any substance. And a lot of these meme coins that we're currently investing $700 freaking million into, they have no substance. They have no real world use. Like, I can't go sit there and say, I'm going to go use my Fart coin on buying, a Domino's pizza, which, speaking of, that's another company that Dogecoin is now currently valued more than is Domino's. Like, what
have you tasted their sauce? There's a reason for that.
But it just like it's also, if you really, really, really want to get crypto into the mainstream and for everyone to buy all in on crypto, and if you want to get crypto, especially Bitcoin, to be back, the gold equivalent, which is what the Trump administration is trying to do, we've got to somehow eliminate these meme coins, because it's just like people are not. What?
Why do you have to Animal Farm? The fittest will survive.
But the not fittest are surviving. The
short term versus long term. Like, for example, Bitcoin, the last Bitcoin won't be out until 2140 or 2141. So way past the point where we're here. They got a long game out there. Will Doge still be there? Who knows?
I'm just saying, it's got to be to the point where if you want people to take Bitcoin, crypto, the whole thing seriously. I mean, even like Daniel made the point about NFTs. Like, NFT is not, it's a virtual item that you don't literally own, because there's nothing keeping someone from replicating it. Like, you just can literally go in and copy paste an NFT and the value suddenly disappears. It's not like an original Monet or some painting or something like that. Yeah, you can copy it, but it's not the original. Like, with digital assets, it can be literally identical, like bit for bit. I mean, and I struggle to find a way to really convince the masses that Bitcoin is something that is real and here to stay, when you've got something that, like a coin called Fart Coin and Shiba Coin or Shiba Inu, that is something that you really want to throw your money at. And especially in a time right now where money is kind of a real concern for a lot of people.
Well, look at it this way. Then I'll be quiet and leave the economics out of this, right?
Yeah, right. Because economics are not important in this at all.
Anything that anyone is willing to put money behind, including the tulip mania, I think it was in the 1500s, people were like throwing all of their assets in the tulip bulbs, and then that crashed horribly, right?
Mm-hmm.
But so what's to make Doge different from USDT or USDC? Both USDT and USDC are backed by the US dollar, so that's the only thing that gives it value. So it means, Josh, there's literally
that
nothing
seems like a really big difference.
And then putting your entire life savings behind that coin, because at that point, however many it divides into, that's what your entire life savings or that coin is worth, because there's actually real money backing, and that's behind it. So you can create an ecosystem where it's like, hey, all right, I have $100 million. I'm going to create Royce Coin. And Royce Coin, however many coins I create, each one is worth whatever percentage of that $100 million. As long as you back the cryptocurrency with something, it's worth something. When you see people start to devalue it by saying it's not worth that, when price discovery happens, like, I don't think Bitcoin's worth 10 grand, 5 grand, 2 grand, a pizza. That's when basically it loses its faith, and people lose faith in it, and they exit the party. That's why typically you see it almost like all these meme coins are literally like ETNs. They all go up big and then slowly deteriorate into nothing. Because people put their money in, know to take their money, and it slowly decays until it fades to nothing.
See, I mean, the irony is we're literally saying the same thing. We're just looking at it from two very different angles. Like, yes, I do think that if you've got a coin that's actually backed by something, it has real world value like that.
That's the thing. If it has $7 million or $700 million valuation, that means there's $700 million backing it.
No, it just means a bunch of people have spent stupid money and put into it. Like, I've seen guys on like Reddit that said I took a second mortgage out of my house and put like 150 grand into this Tua coin. Like, how is that whole thing not dead already anyways? But
that's scary as all get up.
Right.
Talk about playing with leverage.
Yes. I mean, you're not wrong at all. Like, that she has capitalized on that magnificently, and I hate every bit of it, but that's a different story. The whole thing really kind of blows my mind, and it really doesn't make sense to me because there's not really any real world value other than perceived value. But then you get into the definition of the word value, and the whole thing diminishes. And it's more of a frustration thing because like it doesn't make sense. But yeah, and I think maybe I'm speaking for the people that are on my side of the fence as far as crypto and everything is concerned, because it just logically, you can't really reason it out. Like, if you're throwing out economics, then what are we doing as far as investment?
Josh, it sounds like you need to start doing a little bit of FOMO trading.
Yeah, right. Again,
I think you'll think very differently once you start making a little bit of money.
I did a lot of FOMO trading and made $0.
Well, it's sort of like real estate. It's like, hey, the neighborhood or the house is only worth what you're willing to pay, right? Everything's great. You got $1 million house. Put a Dollar General next to it. That house is no longer worth $1 million. And it's all because it was perceived differently. The place did not change at all. What surrounded it did. So it's like,
but it's also tangibility, and it's also and you can't use real estate. I mean, you can't use real estate. Like, you're not a house.
Absolutely.
It's not technically an investment.
The longer you go, it always appreciates. It's because of inflation.
Yeah,
right side Bitcoin's 100K right now,
and we're apparently going to keep continuing to deal with inflation.
Yeah.
So, yeah. Darin, there's your segue.
Well, I was going to say, my feeling has changed on this. So now that we have unleashed the hounds, aka AI agents that are going to be their own conceptualization, their own marketing tool, their own everything, and in their own creation, and then they're going to get with other AI agents, and they're going to collude, just like we'll just say some people in the markets might do now, and then it's just going to basically become a big pile of fart coins, and people are going to continue to do it because they are influenced by
fart coins.
They're influenced. These people are influenced by
conspiring against us.
Well, they're going to team up with each other, and they're their own hype machines.
You've seen the movie Eagle Eye.
You're going to see it. It's going to happen. So I think it's here forever, and unfortunately, and as long as the big guys, like I said, the Finks and the Ken Griffins and all that can make money off of it, as Royce was saying, it's created its own economy. So as long as somebody's making money off of it, it's probably going to keep going. And I don't think it's going to go. There were no AI agents when NFTs came out, because if there were, it might have gone even crazier than it was before. So it's a little scary, that whole AI agent. And I think we've released
the Tesla robot. I think you can get one in your house for about $38K.
Right, and you can get a woman or a man. I'll let you decide what you might want there, and why. But yeah, I think we're about to.
That makes me think of the movie. What is it? Ex Machina.
Yes.
Yeah.
All the guys know that movie. Yeah.
Ex Machina.
But I wanted to go back before I close this up. Royce, you said something about the tulip economy that was created and hyped, and then finally died. And I was just going to say that probably once it died, everybody said Amsterdam.
Yeah.
All right. So we're going to move on. I had to remember all that
two,
time.
sir.
waiting
You're
for-
only allowed two.
You've reached your
still a
dad joke
dad
quota.
though. I'm still a dad. It never goes away. All right, so we're gonna. I mean, we could talk about AI, but I kind of feel like it's going to be the same type of thing that we've already covered here.
What about quantum computing?
Yeah, we did talk about that last week with the Willow and all that, and the ultimate universe. So we've kind of touched on that as well. I think we put all these things together, and you'll have to decide if you want the red pill or the blue pill, and wherever you're going to live. We also already talked about the rate cuts because we had to hit that first. So we'll move on down to Europe and what is going on in Europe. I mean, I've been talking about for a while now about how Europe is struggling. It's just not really getting out there in the news, but Germany has been. So you've got a few things to tell us here about Daniel, about the German economy, what's going to happen.
Yeah, well,
Has
so
happened
I don't know what's gonna happen, but it's not looking too good.
for a
So
while now. Yes.
yeah, so earlier this week they voted, which I assume is kind of like impeaching. They had a vote of no confidence for their chancellor. So that person is on their way out, and they'll elect a new person. And they're Europe's largest economy, but their unemployment is at a 4-year high, which is pretty bad if you're like, the one kind of supporting the EU. Their energy costs have surged by 40% since Russia's invasion of Ukraine. Volkswagen I believe they're shutting down all their plants in Germany.
I don't
And
think it
then,
was all of
they
them.
also, sorry.
I didn't think it was all of them, but I knew they were
I
closing
thought
at
they
least
just
one or
want.
two of them.
I thought it was
the
mostly
worst one.
job cuts at this point.
Yeah.
Oh, okay. Maybe it's just job cuts.
Yeah.
But they, not good when that's your main export is like cars, as
Yep.
a country. And then, now they have to deal with Trump's potential tariffs, which, would really hurt them because they export cars. So yeah, like the big dog in the EU is really hurting. And, I guess it's not looking good.
Well, before all this, there was they also had a real estate issue as well, and it may still be out there. I don't know. I haven't looked it up again, but I remember bringing that up many months ago that Germany's having a real estate issue. So now I think it's just everything is just starting to, well, they're admitting it finally. Everything is going down because they can't admit it too early because of the contagion throughout the world. But they're starting to hear more and more about the world having their issues, and maybe this whole new 2025 will reveal things that uh, a lot of us already suspected, but now can be released for people to do. So we can have that volatility again, Royce.
Hey, we love volatility. Volatility makes
That's
the
right.
world go round.
That's right. So anything there, Mr. Banker, or your thoughts on Europe and basically the world economy?
No, I mean, I guess, world economy, yeah, sure. We circle back to like we were talking about with the emerging markets.
Right.
There's a lot of things that we have similarities. I think globally, everybody is kind of struggling with a lot of the same things, coming off like the pandemic and fighting inflation. And every country followed the US's lead, maybe not on the same timeline, but did essentially the same things. So we're all kind of in the same bucket. The one thing I do almost disagree with the doom and gloom over Europe is the fact that I think that Europe has more of a similar infrastructure that the US has to actually withstand the times of turmoil and things like that. Whereas what is causing the dollar or what's helping the surge in the dollar and what's hurting a lot of these emerging markets is they don't have the same infrastructure because it's the same problem that every emerging market has is they don't have the infrastructure. They can't really sustain that kind of turmoil, and we're all dealing with the same thing. It's just Europe, I think, is going to be fine. Like the US is going to be fine, but a lot of these smaller, China's probably going to be fine, although they're dealing with a lot of different issues. But yeah, some of these emerging markets are going to struggle and it's going to fizzle out, and you're not going to have that capital injection or the capital inflows like you are with the dollar, because everybody's pulling them out of those, those smaller markets, and the dollar seems stronger and the returns and everything, and with interest rates. And it's just, I don't think that Europe's really in any significant danger. I think they have what it takes to withstand all of it. Same as we do. And I think that's kind of where we're seeing all of that money move, is into more of a stable market and stable dollars. And, the euro is going to be fine. But
well, I've got two things. One thing would be inflation, and the second is the debt that we still have, our national debt. And both of those things are going to have a reckoning at some point. And it's,
So
I
what's
know
a
that you don't
reckoning?
believe that. A
What's a
reckoning
reckoning for you?
is a reckoning is that people are actually going to start asking for their money. I mean, it's not going to be I want my money now. When people start getting in a situation where they're fighting over dollars that's theirs, that they've loaned out, and they want it back now, then once that domino happens, I think that's going to be the reckoning that I'm talking about. You can't just continue.
Only
You
in the
can't
markets.
continue to have this debt. You can't continue to have this national debt and it not be a problem. I mean, because we're paying so much out now. What is it? 8 billion or 8? What is it now? I mean, the whole is about over 50 trillion. I know that, but even just in interest only, and if interest keeps going up, that's going to be a bigger payment. And it just seems like
But
it's
that's
a
just it.
domino.
They're cutting the interest rate, which means they're collecting less on what's already lent out.
But they're going to stop it here. They're not going to go down to the 2%. They're stopping
You don't
it
have
right
to.
here.
You just have to be lower than where you first accrued it to once again take the differential of the two and win. If I borrow $50 million and you're going to give me 3% over here, and I take that 50 million over here and I make 12, 15, 20%, I'm still up 8 or 9%, even though I borrowed.
That's fine in the markets. What I'm talking about is just the general economy of the country, not the top elites, the top 10%.
That's how countries do it. They will literally, you will trade an Aussie dollar for a US dollar or a New Zealand dollar for a US dollar, and the countries are going back and forth, and they're just using reserve banking to make sure that it always floats.
So all right. So how are we going to get this national debt down then?
Oh, we won't.
How's that going to happen?
We have no incentive. There's no incentive.
Record levels. How are we going to get that down?
I just explained how. So if the dollar,
why aren't they already doing that then? They
are. You think that basically the money just sits there? So like a lot of let me see. There's something called Nostros accounts. Every single country, every single central bank has one. And basically they're holding whatever the reserve currency is in that Nostros account. So it means like if I'm the British pound, I'm holding at least $1 billion worth of US dollars in that Nostros account. So that way I don't have to change it between my money and their money to get US dollars. Anytime I need US dollars, I just take from that stack, right? So, and someone had to have lent me that money. So if the US lent me that money, if my rate is higher than their rate, the difference between the two, I'm making money every day. It's sitting there. And it's not that 1/5 or 1/10 of a percent either. Right? So all you have to do is basically make sure you've lent out enough money that your return on the money that you lent out is more and faster than what you're spending.
Well, and that's the problem, is the spending's been way over what.
How do you know it's over?
Well, I'm only going by what I've told you. I don't believe in the numbers anyway that anybody puts out. But our national debt is supposedly over 54 trillion now, and it's like down. It's like everybody owes over 300K if you wanted to pay it off per American right now. It's absolutely crazy. So how in the world are they going to reverse that right now? Or, I mean, I understand making money off of that on the exchange, but I'm talking about just in general. At what point because they still haven't balanced the budget now. And now they're talking about, all they've done is just push it forward, not handle it, but just push it forward with I guess, just money out of thin air to take care of these programs.
Let me try to frame it a little bit differently. Maybe. All right. So you got DXY, right? DXY, when DXY was trading at 100 as opposed to 108, everything that we borrowed at that point has since then appreciated about 8%. Just in the amount of time from where it was at 100 to where it's at 108. So as long as the dollar continues to get stronger, the money that we borrowed back then basically is worth more now. So when we're paying back, we're actually paying back less than we borrowed.
Well,
because it's worth more.
The reaction from the financial institutions today was bad. I mean, along with everything else.
Of
But
course it was. But
with the yields
people
going
that the
up,
market
all
will
of a
crash
sudden the
from
banks
here.
were like, boom, this is not good. So, I mean, I don't know
Like I
what's going
said,
to
you
turn that
believe the
around.
bank is going to crash from here. I'm thinking this is the beginning of the next bull rally.
Okay.
Okay, God, my brain is broken. If Perma Bear over here is fucking,
No, I'm just
talking about
following
a
economics.
bull run.
I'm
Like,
just following economics. The dollar has continued to get stronger, right? Trump said, "Hey, we're going to make America great again," whatever that means. That means in order for America to be as great as it has previously been, you have to make the dollar the dominant currency. When they introduced the euro, that took away about half the power that we had because basically everybody on that side of the pond was saying, "Hey, that's going to be the reserve currency over here. America, do what you want to do." Right? So in order for us to get that dominance back, the dollar has to be incredibly strong. And everybody that we borrowed money from them in their currency, and we pay it back in ours because ours appreciates and it spends everywhere.
well, that's even more to your point is like if the debt collector has no leverage, then what is the incentive to pay back that debt? Like if they're literally, I mean, if we owe money to these various
US dollars, you're not paying it back in their currency.
I'm even further to that's what I'm saying. Further to your point, like if these countries have no leverage, like we have no incentive to pay them back if we are essentially the currency. Like they're going to want to continue to invest
in their currency. So if we borrowed money in their currency and spent it in their currency, when we're paying it back because our currency has appreciated, we wind up paying them back less of the money, even though it looks like the same amount. But our dollar, when it converts to theirs, they're like, okay, we borrowed $50. Well, $50, for example, $50 in the offset US dollar used to be about 73 cents. Now it's 62 cents, which means it took less of our money to pay back their same $1, which was 73 cents, but now it's 62 cents. So I mean, their money lost 15% of its value when we went to pay it back. So we give them 15% less than we borrowed, and we still wind up ahead.
Right. I was just making a point about how Darin was talking about like the reckoning with the debt, and if somebody comes, one of these countries comes to collect, what exactly are they going to offer? Like
the U.S. dollar.
The debt collector has to have some sort of leverage if they're really going to strong arm the U.S. If the U.S. is the dominant currency, they really can't strong arm the U.S.
How are they going to collect from the ones that owe the U.S., the banks that owe these countries that owe U.S. banks? Because, I mean, we get down to it, it's the banks.
It's bank versus
that
bank.
they owe it to. And so what's going to, if a country is hurting and it's becoming less and less value, then how are they going to pay back our banks if we're talking about a ton of money that they owe the U.S.? How are they going to collect that from a country that's already belly up, so to speak? I mean, how's that going to happen? How's that going to help our banks if those countries can't even pay back
our
what they owe?
money has gotten stronger over time. All right, let's look at it as physical, and then I'll stop. I promise.
It's all right.
Gold, right? Gold per ounce, $1,200 per ounce. Gold today is worth about, what is it, $2,600 something, $2,700 per ounce, right?
Somewhere around there, yeah. Mm-hmm.
Right. So when we lent it out, they said, okay, we're going to give you 3 pallets of gold. That's worth X, Y, Z. When you're paying it back, you're giving about half the amount in weight that you originally borrowed because gold per ounce has appreciated. So you're never paying back what you borrowed. You're always paying back less than you borrowed, and you made more money because you still have the other half. If it was at $1,200 then, it's at $2,600 now. You still have what you borrowed. You gave them back what theirs, what at the value, face value was at that time when you borrowed it, and everybody's happy.
So they're paying back in gold. Is that what you're saying? I mean, these countries.
I mean, that's as easy as
I know they
it
were
basically
collecting
is
a lot of
tangible.
gold.
But that's what
Yeah.
I'm saying, as a tangible, because the dollar's done the exact same thing. The dollar has gone from 100 to 108, so that means it's worth 8% more. So there's an 8% difference in the price for us, which means it's more like a 15 to 20% price difference in the countries that we borrowed it from. So that means we're literally giving them back about 15 to 20% less money than we borrowed. Because everything is measured in their dollar, not necessarily what their dollar is worth to our dollar.
Okay, I get that. I don't understand why, but I get that. So is this why Trump is pushing a reserve for Bitcoin so that maybe these countries can pay back in Bitcoin what they owe? I mean, are we going down that path? Is that where we're headed?
Well,
Is
if
that
you get
these
enough
countries are going to
dollars,
pay it
yeah.
off in crypto? I mean, by the way, an aside, congratulations, Argentina. The president went in there and he turned the debt around to where they are actually on the positive now. That's absolutely crazy. We're only 50 trillion away from that possibility, but Argentina did it. So congratulations there. Wasn't it Milieu? I think is his name, Milieu, something like that.
Potentially.
Yeah, anyway, he did a great job there. So, yeah, we want to continue to beat this dead horse, but it'll be interesting to follow up and see what does happen
I
with
want to see
country
what the
debt.
AI does with this.
Yeah, exactly. So, Royce, it's time for that part of the show, which is After the Bell crayons and charts. And Royce goes through and points out a lot of what Pips
All right,
does
let's
for
go
us
look at the S&P 500.
and helps us make S&P. Okay.
I like to mess with these things.
All right, this is the S&P 500 spider.
This is the S&P 500, and this is on a weekly time frame. Look at that beautiful bull market since 2023, folks. Kind of nice, right? Is it ending? I don't think so. Typically, a bull market will be ending. See that black line? Anytime it gets too close to the sides of that band, that means the market is moving too quickly and can't support it, which forces these candles to pull down and correct. Even with this large move up, this single candle down pushed that line further down, not into where it's forced to go and see it anymore. I honestly think we're just making more rooms, kind of like we did over here and over here, just to keep riding higher and higher. So while some people are saying, hey, this is the end of the road, the other thing is I'm going to go opposite side of the sky. I'm going to go down to the 15-minute chart. Typically, pardon me.
Bless you.
Typically, we stay inside the red and the green band. Anytime we go out of it, that means there's going to be a hard bounce in the opposite direction. And the fact that we were out of it for almost 2 to 3 hours, yeah, that means there's going to be a multi-day rally that should result from this current push to the downside. Yes, they said something, but I also wanted to show you something else. When they said it, roughly about the time they were talking, look, the band was already there. It was already set up. It was already ready to fall. So where are we going? I honestly think back up at least to right about the 600 mark. And then we'll see after that. Technology, I'm going to go look at the cues just to get some reinforcement because, everyone wants a bear market, right? Same exact thing happened. And notice market closed. As soon as market was closed, notice my SAR indicator changed direction and said, yeah, no, from 511, let's go back up. We can't stay out of probability. And once again, that puts us back about 528. It makes it seem like today never even happened. And in doing so, it let this band widen to allow a greater high. Previously, until we had this fall that happened here, the top was about 540. From where we are now, we can make it to 552, if not 555. So it takes a little, but you got to give to get take. So that's all I got. I'm expecting next rally. Let's go.
All right. So the only thing, you're saying it'll bounce back up. There are some events that are happening which could be planned to help with that bounce. We got the Bank of Japan is doing their interest rate decision tonight, by the way. And we have existing home sales. We've got the Bank of England's interest rate decision. So we got 2 countries that are doing that. We got the US GDP, which is always a big mover. Man. And then there's something else Friday, core PCE price index. So you've got all those things that could actually reverse this down, as you were saying, and just happen to push everything back up again, even if it is temporarily, to get us back into where the charts are saying we're going anyway. So, all right. Awesome. So do we have to talk about the last thing or no?
Hey, your call.
No, it's your call. It was your call, and it was a very good call. It just went way past what anyone thought it would be, which is QUBT.
I feel like should
45 when we were talking about it.
Was this a meme coin? What's the QUBT?
Certainly feels like it.
It played like it.
No, you see this?
It played like a meme stock. Hang on, let me get back on there. All right, there it is. That was our bet last week.
You cannot get better than that.
That's crazy. That's an evil Knievel ramp right there. That is absolutely crazy.
And notice it slowed down to allow probability to keep expanding, as opposed to just staying out of bounds and riding up.
True. And it looks like most of the lines are all going up. The top green one's leveled off, though, is leveling off, but it did that before too. So,
yep, got to slow down just a little bit so that way it can grow.
All right,
Dash has a bunch of green.
So the winner, and I'm not even going to get into the channels. Just know that this stock went up how much? 50%, 70%. What was it this week? I mean, it was absolutely crazy.
300%.
Yeah, okay, 300%. So obviously the top channel, which was Royce, just blew it out of the water. And so he is the winner. I'll pull up the scoreboard, and you will now see that Royce has 5, Daniel has 3, I have 3, and Josh has 4. So let's put it all together. We have it's 8-7 now. Quantitudes over the apes. It looks like we have 1, 2, 3, 4, 5, 6 more weeks.
Oh, okay. All right, good.
So it'll be an interesting one. Did you actually pick something yet, Royce, for next week?
I'm
okay.
I'm gonna pick on. I told you I'm gonna pick it. Go back to our old friend, old reliable.
Ah, there it is. There it is.
Because of its volatility. Who's gonna complain about volatility? Literally all the way from, remember when we said at about 160 something to go buy this? Yeah. Who's complaining? that green arrow has been there the entire time. So now the question is our range. Our range is stupid. Roughly 515 to about 380.
Wow.
So let's let me see if I can get some
235 total. What'd you say? Make something even here between divisible by 4.
All right, minus 15. I'm going to do $30 ranges for everybody. So we're going to start at $395. Yeah, let's do that. $395 to $515.
$395 to $515.
Yep.
Total of 120.
Each person.
Yep. $30.
Yep. $40.
All right. So you are you're first, Royce.
All right. And I'm
literally.
Let's take let's see. $480 plus.
What?
It's kind of an evil laugh there.
It is.
I knew he was way too excited about this pick. Like, there's something I'm missing. Like,
yeah,
this is always annoying.
Well, the only thing you might miss is like the stock pick last week is not investing in it.
Yeah.
Yeah, no kidding.
Speaking of FOMO trades,
right. Every single pick that we pick, I've traded, by the way. Every single one.
You put your money where your mouth is. All right.
It's 485 plus, right? Not 480.
Should be, maybe it's 485.
Yeah, I think so. 485 plus. All right. So who's next, Daniel?
Guess I'll go below Royce.
I'm assuming that's who Royce is picking here as his next goes
I
next.
hope so. While the rules still stand.
Oh
for
yeah,
this time.
I'm definitely doing that. Definitely doing that. Gonna definitely do that.
All right, so Daniel's taking 455 to 485, right? Is that what you're saying?
Yep.
Yes.
All right.
And then I'm gonna let you go in, Darren, because
Oh, it doesn't count now this week. We're so far
sloppy,
down.
Leftovers.
Doesn't even matter this week.
Why does it not matter? It always matters.
All right, 425 to 455, of course. And then the banker will be 425 and below. All right.
I'm actually very okay with that.
Murder you, man.
He's okay with that, he says. All right. Never know what'll happen. Never know what macro events will happen. You're right.
You got to get just 420 just to get back in the third deviation like that.
Only a week. So this thing could go up to I have a feeling this thing could go up over 600 this next 6 days, but we'll see. We'll see what happens. All right. Appreciate everybody coming in this week, especially.
Days, but we can see.
Especially, did you have to buy a visa to get back into the U.S. there, Daniel, or you okay? Or
Nope.
He's temporarily here, then he's going to go back out.
It's great. They look at your passport and they say, "Welcome home." Then they send you on.
Aw, nice.
It's always a good feeling.
That's American excellence right there. You know.
Here's airport security. Please go there. All right,
Philippines, they just throw your passport back at you, and I
debriefing. Oh
look
yeah,
at my girlfriend and go, "America, baby."
Yeah, that's right. All right, guys. Let's see. This is the last weekend to shop before you get in trouble on Christmas Day by not having your wife's gift or whatever it might be for us last-minute men who go out and buy stuff. I worked at Target, so I know. I saw them the last week.
Origami.
There you go. Also, if you have not gotten your Amazon order in, and because you want it to be delivered to someone that lives maybe out of town, etc., you might want to have already done that. Maybe do that after. By the time you listen to this, man, it'll be really too late. So, all right, guys, Merry Christmas.
Merry Christmas.
This is our last one until
the last one for this year.
Next year.
Yeah. Let's see. That would be the 25th. Yeah, last one for this year. So appreciate having everybody here, and we'll see you next year on After the Bell from Arbitrage Trade.
Tesla 600.